The global financial system is currently being subjected to the most sophisticated psychological operation in the history of modern markets. And what you have witnessed over the last 72 hours is not a market correction, but a calculated institutional heist orchestrated by JP Morgan to liquidate the middle class. While the mainstream media was screaming about a 30% crash and the death of the silver bull, the largest bullion bank on the planet was quietly closing out its massive, toxic short positions at the absolute bottom of the move. You are being told that the silver rally is over because of a stronger dollar and the nomination of Kevin Warsh to the Federal Reserve, but the internal data from the COMEX tells a story of a desperate banking cartel that engineered a massive flush-out to avoid a total systemic default. The timing of this 30% crash was not an accident. It was a surgical strike, executed at the exact moment of peak retail vulnerability, utilizing the Kevin Warsh Fed nomination as a geopolitical smokescreen to hide the most aggressive bank-buying spree we have seen in decades. As the U.S. dollar index surged on news of the new Federal Reserve leadership, the algorithms were unleashed to slam the silver paper price through every major technical support level, triggering a massive wave of stop-loss orders. While you were watching the price tumble on your phone, JP Morgan was sitting at the bottom of the chasm, vacuuming up every single contract being dumped by frightened investors who failed to realize that the physical vaults are still bleeding dry. I have spent the last 12 hours dissecting the commitment of traders' reports and the internal settlement data from the LBMA, and the evidence is irrefutable. The big banks have officially flipped from being net short to preparing for a massive, unhedged move to the upside. The $130 recovery trap is the next phase of this operation, where the banks will allow the price to bounce back just enough to convince the remaining retail holders to exit their positions at a break-even point before the real vertical moonshot begins. They do not want you on the train when silver breaks into the triple digits, so they are creating a roller coaster of fear to ensure that only the most hardened stackers remain in the market when the final inventory collapse occurs. While the Western headlines focus on the temporary strength of the fiat dollar, the Shanghai Gold Exchange is ignoring the New York script entirely, maintaining a massive physical premium that proves the East is still aggressively draining bullion from the London vaults. This is a geopolitical arbitrage war that the U.S. Treasury is currently losing, as the physical wealth of the West is being siphoned off to China and the BRICS nations at a discount price provided by the very banks that are supposed to protect the dollar. JP Morgan's decision to close its shorts at the bottom is the ultimate surrender signal. It is an admission that they can no longer suppress the price through paper manipulation alone and must now own the physical metal. The nomination of Kevin Warsh to the Fed is being characterized as a hawk move that will crush commodities. But the secret reality is that Warsh is being brought in to manage a controlled demolition of the debt-based system. The banks know that the $36 trillion debt bomb is in its final countdown, and the only way they can maintain power is to hoard the only assets that cannot be printed or deleted. This 30% crash was the final shakeout, a desperate attempt to clear the deck of all retail leverage before the force majeure protocols are activated on the major commodities exchanges. When the exchanges finally go dark and refuse to settle in anything but depreciated cash, the only survivors will be those who held physical bars. Look at the dealer inventory levels right now. While the paper price is down 30%, the premiums for physical eagles and maples have stayed elevated, proving that the spot price has become a total fiction. The banks are using spoofing and naked shorting to create a fake reality for the masses, while the industrial giants in the AI and solar sectors are bypass buying directly from the mines to secure their production needs. JP Morgan is not your friend. They are the primary predator in this ecosystem, and their exit from the short side of the market is the loudest alarm bell in history that the paper suppression era is officially coming to a violent end. The $130 recovery is the bait in the trap, a psychological anchor designed to make you feel lucky to get out at a higher price after the trauma of the recent crash, but it grossly undervalues the metal relative to the massive money printing. The great deception is the belief that the dollar's strength is permanent, when in reality, it is a dead cat bounce and a terminal currency collapse that will end with silver and gold being the only surviving stores of value. If you sold during the 30% crash, you fell for the oldest trick in the book, the shakeout before the breakout, and the banks are currently laughing all the way to the vault with your silver in their pockets. We are currently in a silent force majeure, where the exchanges are changing the rules of the game in midstream to prevent a total run on the physical vaults that would expose the bankruptcy of the bullion banking system. I'm receiving reports from Tier 1 depositories that large-scale delivery requests are being met with cash settlement offers at a 20% premium over spot, which is a default in slow motion. JP Morgan closed their shorts because they know the rule change is coming, and they don't want to be on the wrong side of the largest vertical price reset in the history of human civilization. The industrial demand for silver is currently on a trajectory that will create a structural deficit of over 300 million ounces this year alone, a gap that cannot be filled by mining production even at 100% capacity. We are entering the silver squeeze 2.0, but this time it isn't being led by retail traders on Reddit. It is being led by the central banks of the East and the tech titans of Silicon Valley. The 30% crash was the last call for the elite to get their hands on the metal before the price discovery shifts from the paper markets of New York to the physical markets of Shanghai. Everything you see in the mainstream financial news is a distraction from the fact that the foundations of the global monetary order are rotting away, and the recovery trap is the final psychological barrier to keep you from independence. Silver is the truth in a world of digital lies, and the powers that be hate it because they cannot print it to bail out their bankrupt institutional partners. This is a battle for your financial soul, and the only way to win is to remove your wealth from the digital matrix and place it into the physical world where the banking cartels cannot reach it or tax it. The stage zero inventory crisis is real, the force majeure is imminent, and the exposed truth is that the biggest banks in the world have already made their move to the long side. The $130 target is just a milestone on the way to a total revaluation of all hard assets as the dollar loses its reserve status and the world returns to a commodity-backed trade system. You must have a grip of iron on your physical holdings, because the volatility is only going to increase as the system reaches its terminal velocity and the paper markets become completely untethered from physical reality. Don't be fooled by the strong dollar narrative. It is the cleanest shirt in the dirty laundry effect, and it won't save you when the debt bubble finally pops, and there is no silver left to buy at any price. I am monitoring the registered stocks at the COMEX every single hour, and the data is showing a massive, unprecedented internal transfer of metal that is being hidden from the public inventory reports. This hidden drain is the true story behind the crash, as the banks used the price drop to settle private physical obligations that they couldn't fulfill at higher price levels. We are looking at a default in slow motion, where the plumbing of the financial system is completely clogged, and the only way to keep the water flowing is to trick the public into thinking the pipes are empty. The recovery trap is designed to create a false sense of security, making you think you have time to wait for another dip, when the real dip has already happened, and the ask price is about to vanish. The Kevin Warsh factor is the ultimate ruse to make the public believe the Fed still has control. But Warsh is a gold hawk who knows the only way to save the system is to let fiat burn. His nomination is a signal to the elite that the hard asset era has officially begun, and the 30% crash was the final clearance sale for the people who actually run the world. If you're waiting for a confirmation signal to buy back in, you are already too late, because the signal was JP Morgan closing their shorts at the bottom while you were too busy panicking. Silver is the insurance policy of the century, and the premiums are about to go up tenfold as the supply shutdown becomes the dominant headline of the next 24 months. The out-of-stock notices at the major bullion dealers are not logistics issues. They are the result of a coordinated buyback by the institutional giants who realize that mining production will never catch up. We are witnessing the death of paper silver, where the 500-to-1 leverage of the COMEX is being forcibly deleveraged by a world that no longer trusts promises to pay. JP Morgan's short covering at the bottom is the ultimate white flag of the banking cartel, a surrender to the physical reality of a world that is running out of the most critical industrial metal. The $132 recovery will be characterized by the media as a speculative bubble, but it is actually the market beginning to reflect the true scarcity of silver after decades of artificial suppression. The trap is the belief that the system can be fixed through a new Fed chair, when in reality, the debt is the problem and silver is the only physical solution. I have seen the internal settlement data, and the banks are preparing for a vertical price gap that will move silver into triple digits in a matter of weeks, leaving 99% of the population behind. The exposed truth is that the 30% crash was a gift to the elite, and if you didn't buy the dip, you were the one who funded their retirement at the expense of your own family's future. The stage zero inventory crisis at the COMEX is the most important financial story in the world right now, yet it is being completely blacked out by the mainstream media to prevent a stampede. When the public finally realizes that the vault is empty, the bank run won't be for cash. It will be for silver and gold, and by then, the price will be so high you'll be priced out. The secret arbitrage between the West and the East is reaching a terminal point where the West will simply have to stop trading silver altogether to prevent the total loss of its strategic reserves. The 30% crash was the last-ditch effort to keep the metal at home, but it failed as the Shanghai premiums only widened and the drain on Western vaults accelerated. We are looking at a bipolar monetary world where physical metal flows to the East and worthless paper remains in the West, creating a wealth gap that will define the next century of power. The recovery trap at $130 is the final siren song to lure retail back into paper markets long enough for the banks to unload their remaining dumb money contracts before the exchange collapse. You must understand that in a rigged system, the only way to win is to not play their game. Don't trade the paper, just stack the physical and wait for the paper wall to crumble. Silver is the key to the cage, and the banks are trying to convince you that the key is worthless, so they can keep you locked inside their debt-based plantation forever. I will continue to monitor every ounce that leaves the COMEX and every short position that JP Morgan tries to hide, because the truth is the only weapon we have against the great deception. The $130 recovery is coming, the banks are now long, and they are waiting for the supply shut down to trigger the most massive price spike in history. Stay alert, stay physical, and do not let the red candles of the paper market scare you away from the only asset that will protect you when the debt bomb finally detonates. The reset is officially here.